it has purged liquidity, and it has left back fair value gaps. Fair value gaps or imbalances are basically open doors or magnets. See that we have a low over here and a high over here. This is what our strategy entails. We put the low over here relatively here and the high relatively over here. Welcome back to another YouTube video of FlareFX, where we make trading very simple. Now if you're new here, please make sure to click the subscribe button, turn on the post notifications, because I post content like this all the time. So now guys, as you can see by the title of the video, we'll be doing gold, US30 and EURUSD. So EURUSD, it's going to be my first trade of the year that I'll be breaking down. It did hit SL, so watch till the end guys, because I genuinely feel like you can learn a lot more from trades that I take L's on more than the W's, you get what I mean. And then I hear a lot of the guys asking me about the mentorship, if I've opened up the waiting list. Guys, I've officially have. I'll put the poster maybe right here so you guys can check it out. Make sure to click the link in the description if you want more details guys. I will be talking to the newer guys if you guys are interested, but nonetheless guys, please make sure to click the subscribe button. Like I said, watch till the end. It's going to be jam-packed, filled with value. I'm thinking of doing psychology videos after this one, because I always break down the psychology videos at the end, but we'll see guys. Road to 1,000. Remember, 1,000 subscribers equals 4 pairs that I'll be breaking down. But nonetheless, let's move over to the charts and we'll start off breaking down gold. Alright, so this is gold on the daily time frame. We'll start off with gold, we'll move over to US30, and then we'll chop up EURUSD, breaking down the trade that we took an L on, right? So now, starting off with gold, or XAU, like people like to call it, right? So now on the daily time frame, we can see that we're on an uptrend, guys. Like, as slow as it and choppy as it is, I would really love uptrends to look like this, but we are on an uptrend regardless, so that's one thing we should take note of, right? I did label a change of character over here. So now I'll remove everything so we can kind of understand what's really happening with this guy, right? So the most prevalent high we have is here, and then the most prevalent low is here, right? So we could find ourselves actually in a consolidation. We never know, hence why I said watch the previous market structure video. I'll put it on top over here, you can check it out, right? So now, with gold making a high and a low and really ranging over here, we already see that we already broke structure over here, right? Bingo bango. This is on the daily time frame, guys. Mind you, I haven't even touched the 4 hour. So you can see on the daily time frame, it looks like there's a whole lot of bullish momentum, right? It makes things a bit simpler for us. So I'll remove this. I'll keep the green one on top so we understand that this is the high we're approaching, right? Now, when we go over to the 4 hour time frame, us understanding the fact that there is a break of structure and we're looking for more buys, right? It makes it easier for us to look at what is this gold in a much more easier perspective, because we understand that the liquidity probably wants to be taken out from this high that we have over here, right? So now coming over here, we can see that we have another break of structure over here that indicates trend continuation. Bingo bango. So now another important thing that you guys must understand, guys, like I said, market structure is such an important thing, mainly because it starts off very fundamental. If you can understand where something wants to go, it's easier for you to trade it. Even if you take a mistake or you take an L in terms of a trade, at least understanding that direction is going to make sure that you're in the right perspective and the right direction. You get what I mean? So now, looking at gold in and of its own over here, we can see that we have a low over here and a high over here. This is what our strategy entails. We put the low over here relatively here and the high relatively over here. And remember guys, there's more confluences before we even highlight this zone over here. We need to have a what? A purge of liquidity, number one, which we do. Bingo bango. And we have a break of structure with a fair value gap left behind, right? So we'll switch this over to the gold indice, the gold Fibonacci retracement tool. And as you can see over here, this is a trade that we're planning on taking on gold, right? Bingo bango. We have a purge of liquidity, we have a break of structure, we have a nice fair value gap that's remaining. And based off of how we know gold and how it likes to retrace, we understand it likes to retrace 50% of the range, right? So now we'll come in with our buy limit, enter here, stop loss relatively below the low over here, right? And then take profit one could be relatively this TP1, TP2. And the nice thing about the TP2 is that it highlights on the daily time frame. I just want to show you for 2 seconds the highest high that we have. So we could even be coming and taking this liquidity over here. Now coming back to the 4 hour time frame, look at it guys. Clean cut finish. There's really nothing much to ask for, right? Just let the market do its thing. Hopefully it does come in, respect this zone over here, and then push all the way to the top, smashing take profit one and smashing take profit two. So that's what I do see on gold. It's looking really nice, looking very clean, looking very simple. We'll move over to US30 and I'll break it down for you guys as well. So this is US30 on the daily time frame. Watch me break this down so it's easier for you to understand, right? So with US30, guys, you need to understand it's a pair that moves zone to zone, or support and resistance type of level. You get what I mean? What do you mean, Mr. Flair? Let me show you. Right, we have what is this, a support zone over here. What does US30 come do? It comes and bounces and pushes all the way to the top. We have another zone over here as well, and look at what it does. It does the same thing, right? So now with Fibonacci retracement tools, especially for this guy over here, it is a bit tricky because I've noticed with US30 it is a zone to zone moving pair, right? Look at this over here. As you can see, support, resistance, clean cut finish. It's a strategy that works with it, and if it's not broke, don't fix it, right? So now we'll even incorporate some of the way we trade in terms of market structure and a bit of the support and resistance as well. So now remember, the first thing you need to do is understand the market structure. What do you see over here, right? US30 is moving higher and higher. Bingo bango. As you can see, clean cut finish. There's really nothing more, there's really nothing less, right? It's moving higher, and the only way we can tell this is moving higher and higher is because highs are being broken, right? This is the core principle of what? Market structure. Now, since you understand where the market is trying to go, it's easier for you to what? To scale in and buy if you need to buy, right? So now we can see we have a nice change of character over here. This is telling you that this thing has trend reversed and wants to keep on moving higher and higher. And remember, what do we have? We have a purge of liquidity as well. Bingo bango over here. So we have already the things that we like to see. We see we have a purge of liquidity, so that tells us that price doesn't want to go low because already took out the stop losses. And we have a nice fair value gap chilling over here, right? So now there's two ways you could execute this, right? You could execute it via the support and resistance method, right? Bingo bango. So this could be your entry, stop loss relatively below this fair value gap. Or you could be a more conservative trader like I am, put the Fibonacci retracement tool over here, switch it over to the indice, bingo bango, and then this is relatively where you'll be executing, right? So it is a bit lower than anticipated, but it is a very good key zone because price has been playing around over here. So you can come in with your buy limit order relatively over there, stop loss relatively there, and then you could catch it. This is a nice 1:3 risk to reward ratio in US30. Actually, this is something I would take any day, guys. Any day, any day. It's looking clean, it's looking simple. So we'll run it back, right? Mr. Flair, how did we get to these buys? Firstly, what did I say? On the daily time frame, look for the market structure. Here we really understand this thing is moving higher and higher, right? Bingo bango. Since we understand this thing is moving higher and higher, we can see that even highs are being broken. This is telling us that yes, our bias is correct. All right, since we understand that this thing is looking for more buys, it makes it easier for us to position ourselves in buying opportunities because we understand that it wants to keep on climbing. Now, we get to this point over here. Like I said, now we can see that, okay, cool, price is changing character. This is showing us bullish behavior, and it has purged liquidity, and it has left back fair value gaps. Fair value gaps or imbalances are basically open doors or magnets. It gives the price a reason to come back to that position and fill it out, right? So now, with US30, I am anticipating for it to drop into the zone over here, right? And then we can proceed to push up for a nice 1:3, guys. Clean cut finish. Same time. So now we'll go over to EURUSD. I'll break down how we took the trade, how we managed it, and what happened, and how we've learned throughout the trade, right? So now let's move over to EURUSD. All right, bingo bango. So this is EURUSD on the 4-hour time frame, guys. This is the trade, the first trade I actually took of the year. I was anticipating this thing to plummet all the way to the downside just as Trump's inauguration, but it kept on climbing, right? So before I even break this down, I want to let you guys understand what I was seeing or what we were seeing before we took this trade to make us take it, right? So I'll remove everything and I'll break it down for you guys, right? So beforehand, guys, we already saw that price was moving low and lower, right? You can see over here, we have a break of structure. Bingo bango. This is telling us that price wants to keep on moving lower and lower, right? Break of structure, clean cut finish, price keeps on moving lower and lower. So we can come in with the Fibonacci retracement tool down all the way to the downside over here, right? Then we'll switch this one over to currency pairs because there's different retracement values for different pairs and commodities, right? So now, as you can see on the 4-hour time frame, this is EURUSD, right? This is the initial entry that we were looking for. We have the purge of liquidity over here. We have the break of structure, and we have a lot of fair value gaps. So it made sense for us to take this trade, right? Price came in, respected it, pushed all the way to the downside, and broke the low, right? So now, as you can see, this was the first trade we saw, right? So automatically, my head goes out as the team's like, okay, cool, price broke structure again. We're anticipating the same thing to happen. Why? Because number one, we have a purge of liquidity. Likewise, again, purge of liquidity, price push all the way to the downside. We even have a break of structure with fair value gaps, right? And then we can pull out the Fibonacci retracement tool like that. So we were anticipating to sell this guy all the way to the downside like this. Clean cut finish, guys, you know. So now that didn't happen. Price eventually took us out over here, right, with clean cut finish, right? So now, understanding this conceived notion, guys, you can't beat yourself up for something that you can't control, especially in these types of situations. We were trying to trade the trend, and clearly that didn't work, mainly because of Trump's inauguration. All the fundamentals came into play, but the strategy works regardless, guys. One thing for sure I want to make sure is to show you the L's and in conjunction with the W, so you guys can understand like the reality of trading, number one, the reality of the strategy, and how you as a trader can keep yourself psychologically cool, especially when you're trading, guys. Now we're gonna move over to psychology. Now I'm talking about psychology, but it's like I hear a lot of beginner traders saying, oh, I'm struggling with psychology, guys. There's no way you can be struggling with psychology, especially if you don't have a systematic way of approaching the market, right? So with me, I have a systematic way of approaching the market, like I've showed you with the other trades I've broken down and here over here, right? So one thing you need to understand is that once you have a systematic way of approaching the market and you know what you're looking for and you know your edge, then psychology can come into play, because now you understand what you need to do, but do you do it, right? Do you follow risk management? Do you follow your trading plan? You get what I mean? Those are the important things. You can't have psychology in the beginning, guys. In the beginning, it's you figuring out your edge. It's edge first, psychology, and then the other stuff comes later, right? Risk management and everything else boils down to psychology as well, because the edge, you have to understand. Your edge is everything in conjunction. Your risk to reward ratio, your risk management, your trade management, and your execution. That is your edge. You need to practice those things. Then your psychology comes after. Can you still do the same things you were doing while you were backtesting or, you know, practicing on the charts, guys? That's the most important thing that a lot of new traders don't understand, even intermediate traders, guys. Taking the time to understand your own edge. What are you actually trading? What is your strategy? Can you write it down like on a piece of paper in 5 sentences? You get what I mean? I can, right? Here's my strategy. Simple, clean cut finish. I like to trade trending markets. If it's not trending, I do not trade. I wait for a high to be developed. After a high is developed, if we want an uptrend, I'll look for the prevalent low and the prevalent high. I want to make sure that I execute based off of a specific pivot point or a specific level, right? Based on the commodity. With indices, I know I execute on the 61. With currencies, I execute on the 70%. And if it's gold, I execute on the 50%. I do that day in, day out. Risk management solely depends on how much money I have in my account and what is my risk tolerance in that occasion. But for specific accounts, I have a medium to high risk, even low risk accounts, guys, where you know and understand what you're supposed to be doing as a trader. But that's what I'm trying to show you guys, is that it's not fairy tale and rainbows and clean cut finish as we show you guys on the charts, guys. You taking trades and you taking it a day at a time, it's harder than it actually seems, guys, but it doesn't mean it's impossible, guys. You can get to profitability and you can get to consistency if you're taking the right steps and moving the right direction, guys. Keep on doing it. From my side, it is Mr. Flair. If you guys are interested in the mentorship, guys, I will put the post on top over here. Please make sure to click the subscribe button. Make sure to follow me on Instagram, because that's where I post a lot of content. Even this will be going on Instagram as well. But nonetheless, guys, it is another day. It is another dollar. I will catch you guys next week.